Have you ever paused to consider what true financial excess means in the realm of Islamic finance? Many of us hear the term riba and immediately think of simple interest, but the concept of excess can feel much broader. So, is every form of financial excess forbidden as riba? The direct and clear answer is no. Not every instance of excess is considered riba in Islamic finance. While riba is indeed fundamentally linked to an increase or excess, specifically an unlawful one in financial transactions, not all additional gains or profits fall under its strict prohibition. The critical distinction lies in the nature of how that excess is generated. Riba, at its heart, refers to an unjustified or unearned increment in very specific types of dealings, primarily loans and certain exchanges of fungible commodities. The wisdom behind the prohibition of riba, clearly outlined in the Quran and prophetic traditions, is to prevent injustice, exploitation, and an imbalance in wealth. It targets an increase that comes without corresponding effort, shared risk, or a legitimate exchange of productive value. For example, charging an additional amount on money loaned, even if it is a small percentage, is riba because it is an increase on money for lending money, without any productive activity or shared venture risk. Similarly, exchanging unequal quantities of identical items, like dates or gold, without a valid reason can also constitute a form of riba known as riba al-fadl. However, an excess that arises from a genuine trade, a partnership where both profit and loss are shared, or a productive enterprise is considered lawful profit, not riba. This is where Islamic finance truly differentiates itself, championing earned returns over exploitative gains. Imagine investing in a business. Any profit you earn, even if it is a significant excess over your initial capital, is permissible because you shared the risk and effort of that venture. So how can you navigate this distinction in your everyday financial decisions? Always ask yourself if the extra you are gaining or paying is genuinely tied to effort, shared risk, or the exchange of different goods and services at a fair market value. If you lend money and expect more money back, that is riba. But if you participate in a venture where you genuinely share in the profits and potential losses, any earned return is your legitimate share. This concept is beautifully captured by the principle of al-kharaj by al-dhaman, which translates to gain comes with risk or liability. This means that for any financial gain or excess to be permissible, there must be a corresponding assumption of risk or responsibility. This foundational principle encourages productive investment and trade over interest-based lending, fostering economic fairness and shared prosperity. Understanding that not all financial excess is forbidden, as riba empowers you to confidently engage in halal financial activities. It guides you to seek out transactions where gain is linked to genuine effort, shared risk, and productive exchange, aligning your financial journey with ethical Islamic principles.